morning, everyone. Welcome to Mortgage Pros 411. I am Audrey Boissonou, and this is my co-host, Kevin Casey. Today, we are lucky we have Robbie Chrisman with us. That's right. That'd be Robbie Chrisman, not Rob Chrisman. Do not mix them up. They're completely separate people. Robbie has been in the mortgage business for 15 years, so do not be confused by his youthful appearance. He is a wealth of information, which we'll get to in just a moment. But first, it's a big week this week. It's jobs week. So tomorrow we have ADP. It will be giving us the February numbers. Friday is BLS jobs report. They're expecting 200,000 job creations for both BLS and ADP. And they're expecting that the unemployment rate will remain at 3.4%. There will be no seasonal adjustments in this report, unlike last month. So the hope is this will be, well, some people would question how valid last month's report was, and maybe this one will be a little more enlightening as to what's really going on. In addition to that, because we wouldn't want to, get bored with the new upcoming things that are happening. Wednesday, we have a 10-year treasury and auction, and on Thursday, we have a 30-year bond auction. But today, it's all about Jerome Powell, who was testifying in front of the Senate Banking Committee, which was fascinating. Kevin and I both watched, didn't we?
I listened. I didn't watch, but.
Okay, I watched and listened. So we were just discussing how frustrating some of our less bright elected officials are, and how frustrating that is. But Jerome Powell is bright. Something. I mean, we know that, but this was a real example of he's thoughtful, he's thinking things through, but they're definitely charging forward and thinking that they're going to continue to raise, right, Kevin?
Yes. Yeah. So the idea of ending somewhere between 5 and 5.5 increases total is going to be a little bit less off mark, and they're going to go over that mark, is what he said today. So that messed up the markets today.
Yeah, sure did. So the Fed will likely increase the upper target from the current 5.5% to 5.5%. It'll go higher than that. And the Fed meeting is what, March 21st and 22nd, something like that, right?
I don't have
it. And he mentioned like 2 or 3 times. And the reason he had to mention things multiple times is because he would answer a question, and then the next senator would come and ask them the same exact, well, not senator today, I guess it was the House. Anyway, he would come and ask the same exact question. He'd answer it again. It was, were you blown away by that? Because I surely was.
Well, what I come to learn is the senators that are reading their statements.
Oh yeah.
Not the brightest ones.
The last one, OMG, it was ridiculous. I won't say who they were with, but anyway, so he was testifying, just to be clear, in front of the Senate Committee on Banking, Housing, and Urban Affairs. It's the semi-annual monetary policy report to Congress. So
yeah, so now these aren't just your ordinary, just to be clear, these are not just ordinary senators. These are the ones on the banking committee that they should have some knowledge of banking.
Yeah. So we've seen this over and over again when we go to Washington, D.C. or whatever state capital you happen to be from, where you're talking to your elected officials and you realize how little they know about what they are legislating. And so I thought that was interesting. And also the fact that Jerome Powell mentioned a couple of times that the Fed has a dual mandate. They're supposed to maximize employment and maintain price stability in the market. That's their mandate. It's not about housing specifically. It's not about, whether your neighbor likes whatever is happening in their backyard. It's literally those two things. And so the different people who were asking him questions kept coming back to, well, what about affordability? What about this? What about that? And that's not included specifically in their mandate.
Not his job.
Not my job. I guess the one time that comment doesn't totally piss you off and annoy you, right? So, anyway, so I thought it was, I thought it was really, really interesting. He said monetary policy isn't specifically used to address housing policy. So although what they do is really important, it matters, it is not completely connected. So Robbie, thoughts on all this?
I have 2 thoughts. One is that in a former life, Fed Chair Powell was an attorney, so he's very adept handling lines of questioning, and I think he handled himself very well. The other thought there would be, for the last couple months, it's been this game of chicken between the Fed and Wall Street about, is the Fed serious on its hawkish rhetoric? And it seems that we're finally pricing in the Fed being serious on its hawkish rhetoric. It's unfortunate it took this long, but markets are finally taking Jerome and his colleagues a little more seriously. Sorry about that.
Well, right, but then, okay, so if Wall Street likes it, then why is the market going to?
No, not that they don't like it. Why would you like it?
They don't like it. Okay, just
Yeah.
found on that. So the Wall Street doesn't want them to be tough on inflation. Why not?
Because the more that the Fed restricts monetary policy, the less demand there's going to be in the economy. These companies are going to have much less profitability going forward. It's going to just put a damper on everything. And so it was kind of a punch bowl these last couple of years with the Fed handing out free money, and they're basically saying the party's over. And anybody that, I mean, just look at the mortgage industry the last couple of years, how good 2020 and 2021 were, and the tighter that the Fed gets here with how they're restricting their policy, the tougher it's going to be out there.
Exactly. Well, I mean, let's just say we did all of our refinances for the next 5 years in 2 short little years, right? I think I read that 80% of the transactions right now are purchases. So if you are not focused on that, you are missing the ball. It is a purchase market, and also it's interesting because there's such a focus on rates and such a focus on, oh my God. And the bottom line is, if you need a house, you got to buy a house, right? So when is the best time to buy? Buy when everyone else is freaked out. So I had a client this week, because we're having these conversations too, Kevin and I, we do loans every day, right? So I was referred to this woman, and she was, I mean, like talking at me a mile a minute, completely just, and she said, I want to rate at 4%, maybe 5, but 4. And that's the only way I'm going to buy a house. And I'm thinking, okay. So I very carefully explained to her that the estimates were not for 4% anytime soon, if ever. And that she, maybe the focus should be on what could she afford. So the more I had a conversation with her and stayed calm, and you can't be combative, you can't argue. But I said, it sounds to me, and tell me if I'm wrong, that what you're really concerned about is, are you going to have a payment that's affordable? So she used to have a payment that wasn't affordable, and therefore she wasn't able to pay off all her credit cards, and she wasn't able to do all the things that she wanted to do. And now she can, and she's attributing it to her low interest rate on her mortgage. Okay, well, that definitely plays into it for sure. But she's going to need to come around to the place where she is open to the idea of, okay, forget about the rate. Let's talk about payment. That's the way forward, right? And then I have another guy who's pre-qualified, and he told me, I don't want my payment to be more than X. And it was very similar to his rent payment that he's paying now. But he has an Amex bill with, through his business that's like $2,000 a month. And I'm like, buddy, how about we take some of your down payment money and pay that thing off, right? So
Yeah.
These are the conversations we have to have with people, and we cannot let them drive the narrative forever. We can listen to them, we can empathize, and then we have to help them understand what the reality is. Buy before you get to the bottom of the market, right?
Yeah, no, it's Robbie, let you deal with that one.
The best time to buy a house is always right now. That's my opinion on it. If you want to be in a house,
Absolutely. I'm
you can afford it,
100%
get in
on
a
that.
house.
The second you can afford it, buy it.
Right. I mean, especially because the forecast, as we've talked about so many times, is we don't have enough housing, and we have all this pent up demand. And yes, the average age of the first time home buyer is definitely higher than it has been in the past, but they're buying houses. They want to buy houses. They don't want to live with their parents forever. Most of them, hopefully. And there is this need for housing. So because we don't have a lot of inventory, the inventory levels just keep dropping. It is not going to get better. It's going to get worse. And especially once we get over the hump where, okay, rates are at a point where people are like, okay, I can handle this. Then the sellers are going to be like, oh, hey, I don't have to give up as much on price. I don't
Uh-huh.
have to negotiate the same way, right?
Yep. Yeah, no, we just got a comment from Jill James saying that, when the real estate markets hit the bottom is when it starts going up again. And I think we're pretty close, so.
Exactly. Exactly. So let's talk about these job reports, Robbie. What are your thoughts on them? They're coming
Well,
up this
I have one quick
big driver.
comment on inflation and housing values. Economists actually like deflation less than they like inflation, because in an inflationary environment, you say, I want to buy a house now because the price is going to go up next month. In a deflationary environment, nobody buys anything, because why would you buy now when you can wait and prices will go down into the future? So as long as we're in this inflationary environment, which it seems that inflation is a lot stickier than many people had hoped, buy a house. It's my advice.
Yeah, buy a house. So when you're buying a house, don't forget that that FHA just reduced the MIP on March 20th. Enact Mortgage Insurance Company is going to have a pricing comparison engine on their website where you can go in and plug in your scenario and figure out whether it's better or worse for your client to have FHA versus conventional. And you should be doing this, definitely.
Interesting. What's the site?
It's Enact's website. So you can call Letta McNutt is my favorite rep. She's the only rep I know. So we'll embed her contact information into our YouTube recording, and then you can find it there, or you can just ping us and we'll let you know how to reach her. But anyway, yeah, so that'll be a good tool to use going forward. Yes.
Yep, no, that would be very good. And I want to go back to something Robbie just said about the inflation versus deflation, and just echo what you were saying. And that was that, like, if they came out and they said that home prices next year will be 10% lower than they are next year, well, you'd be dumb to be buying. You want to sell, right? Because like you want to take your money and go. And I just dealt with this on something I was looking at. It's like, well, where are the home values going in this area? And they were all projecting downwards. I'm like, well, why would I want to hold on to this property? I want to get rid of the property because it's at its peak and it won't see that peak for a while or get back to that peak. So that's, sometimes inflation is good and bad, but it's just a thing of when things are going down, people hold on. They don't want to, they hold off on buying. When inflation is just, and that was one of the things Powell was talking about today, was how the 2% inflation market's just like the right number, because it's just enough that, I need to buy now because it's going to be a little bit more expensive next year, and keeps you kind of always moving ahead, versus if things are going down, people tend to just stay put, and it doesn't stimulate the economy.
I thought that was one of the best questions he was asked today. Somebody asked, why is 2% the target for inflation?
Yeah, I thought it was brilliant.
I did too. And what he said, in addition to that, he said it's a globally agreed upon target, which I didn't realize. He said it anchors inflation and people's expectations matter. If you believe it, it's going to be, right? So that if you think that there's going to be inflation at 5%, inflation will go to 5%. Everyone's expectations shift. And that is why I thought it was fascinating. I thought it made total sense. I'm like, wow, okay. That was, yeah. He said the reason it stays low and predictable, and they're not going to change it. He was adamant about that. They are not going to change their 2% target, period. So don't expect that. And he says that they do it so that people don't have to live their lives worrying about inflation. I'm like, oh, okay, that's nice. And again, hearing it straight from his mouth, that was good. The other thing too is somebody asked him about a soft landing versus a hard landing or no landing. Like, where are we going to end up as far as recession, et cetera, et cetera. So Robbie, do you have any thoughts on this?
My thought on what you just said is, you're saying it's good people don't have to worry about inflation, or he wants that. All anybody is doing right now is worrying about inflation. So look at what this monster that he's created in the first place. But
You think it's his fault?
I think he was dealt a very unfavorable hand between the pandemic and all the margin calls that happened to lenders and saying, okay, we need to support the economy. And then right when things were getting sort of under control, then Putin decides to invade Ukraine, and that messes up the global supply chain again and drives energy prices up. It's been a tough time, but I would say he has not done himself many favors.
Really? So you're blaming him more than all the spending, et cetera?
I think that the Fed went with a knee-jerk reaction to pump liquidity into the economy
Oh,
during the
you
pandemic.
are-
And hindsight is obviously 2020 here, but it seemed that it was very preemptive and unnecessary in a lot of respects, in my opinion.
Right. I mean,
Well-
they did several things during the crisis. They bought mortgage-backed securities and other types of securities, this carte blanche. And then they also lowered rates. But they didn't stop buying securities when they didn't need to. They could have stopped buying them earlier. Is that what you're trying to say? Or is there other things they could have done?
No, those are the two main things. And the Fed's balance sheet swelled from under $3 trillion up to $9 trillion.
That's
It's just
huge.
ridiculous, the amount of securities they're buying.
Do you know where it is right now?
They stopped buying last September and they've let runoff happen. It's still somewhere above $8 trillion.
Holy guacamole, is that right? Oy vey.
No, yeah. I hope it's right.
I need a moment. Oy vey. Okay. That I don't know why that just seems like a very big, awful number to have to swallow. So guess what Congress did not do recently? They did not extend the ability to deduct PMI from your 2022 taxes. Did you know that?
No, I did not pick up on that one.
Mhm. Yeah. So again, if you're looking for reasons to talk to your clients, make sure that they know this, okay? Because it may or may not drive a decision about something else. And then also know this, that going forward, the when somebody is buying, it won't be deductible. So, and it was interesting because I have heard almost nothing about this as far as our trade organizations and what they're doing. And the answer was, okay, it impacts very few people, and most people don't get to take that deduction anyway. They're taking a standard deduction, so no big deal. And I'm like, I'd be curious to hear from our listeners whether you think it's a big deal. Do you think it's going to impact your borrowers? Is that going to be something that is important to them or drives a decision about whether they buy a place or not? Or, you know what I mean? Isn't that crazy though?
It is. Well, it goes into our calculations now. It might make more sense to do an 80-10-10 versus because you can write off that interest. And there's no PMI.
That's a great
in that
point.
situation.
Yeah, 80-10-10. Although, I mean, depending on what the HELOC rate is, but I mean, yeah, it might
Yeah,
be.
well, that's a whole lot of interest rates to write off, though. When you're paying 7.5% or something on that, or 8.5% on that HELOC, hey, that's more deduction for you.
Right. Although, can they qualify at that level, right? I mean, with those rates. So
That's what I'm running into also.
always complicated. You always have to make sure that you're running each scenario for each borrower individually. But holy moly, here's another thing. So this is interesting. So, California declared that we are in we've had all these disasters. And so they extended your filing date for your taxes, right? Okay, so it's gone from April 15th. Is it May 15th? When is it? They pushed it. They pushed it way far. And I wrote it down somewhere and I can't find
That's
it.
only California.
It's
And
only,
it's only counties that have been affected by the disasters. It's not all counties.
right. But I was talking to my friend who does taxes, and I think that they pushed the deadline for everyone, is what I was told. So we'll have to double check this, but it's good to know. So, okay. So think about this though. So you live in California, you file a California tax return. So initially it was California had extended, but the feds didn't. Now they made it so, okay, Californians can file everything on the same date. But let's say that you have a property in Arizona, and Arizona did not extend the filing date. So guys, as always, super complicated, and make sure that you're paying attention because it's all, I mean,
I think it's kind of moot because you can file an extension easily with the IRS, and that automatically gets you a California extension anyway to October 15th. So I don't know what that rule does.
what do you mean? It gave everyone extra time. You don't have to file your tax return. That's what it did. And make sure you're reading these comments because I see them popping up, but it's so light where I am, I can't read them.
I see Kevin is correct. That is the very last comment on there. I'm going to stay with that one.
God,
I'm
really?
not going to go off any
don't
other
need to
comments on here,
that
but
monster.
I do want to thank Catherine for that lovely comment that I am correct. Okay.
If you could like print that out and frame it for him, he'd really appreciate it.
Oh yeah, I'm going to have it printed on the
Play
wall.
behind him and
Yep,
next.
so- but she does go on. You have to have your, no, the one thing is you do have to pay your IRS income taxes by the April 15th, whether or not you file an extension. Part of the extension request is how much do you owe, and you have to figure that out and give a ballpark.
Okay, that is not correct based on my conversation with my CPA. So I will quadruple check this and we will circle back next week, okay?
Sure.
Yeah.
Oh wait, who do we have next week, by the way? Just
You know this is gonna
drop
be
the
a
name
humongous debate. That's so funny. Okay, sorry. Did you read all the comments, Kevin?
No, I haven't. They've been going by pretty fast. A lot of them just keep saying how smart I am.
No, listen to me. You go to the top and you start there and you just scroll your way down. That's what I normally do when I'm not like in a light tunnel where I can't see.
Oh, okay.
Okay, so you're in charge of this. If we miss a comment, Kevin will not be correct anymore. It will be his fault. Got it? And I'd like to understand what the dialogue was. Read as we got to Kevin is correct, because I don't know if we can let that stand. So who are we going to have next week, you asked? We're going to have Dr. Lawrence Yoon. Who is he? He's the chief economist for the National Association of Realtors, and he will be joining us. And so invite your realtor partners to join us next week, because it'll be really interesting. And if you have questions ahead of time, let us know, please. Please email me at audrey@mortgagepros411.com. And that way we can make sure we get everything. But, you know, as always, we'll have the chat box open. I'll be back in my usual spot next week, so I'll be able to see the screen a little better and actually read them and not leave it up to Mr. Perfect here. Oh, I'm sorry, Mr. Correct, not Mr. Perfect. And we'll go from there. Yeah. So did you know that 99% of borrowers who own homes have rates of less than 6%? And
Yeah. I mean, today?
Today, and 28% of them have rates lower than 3%. I thought that was interesting. Although
those are buy downs.
What?
Those must be buy downs.
No. The people who already have mortgages. I'm not talking about
Well, people who already have more. I thought you said
Yeah.
people that get rates today. I'm like, oh, that's impressive.
Oh, correct.
But
Okay.
there are people that have rates that are at or above prevailing rates still today.
But
And
not
because they could not refinance because of a job loss or a credit ding or dent. And there's still opportunities out there of people that can still save money by refinancing.
well, and sometimes if you take again, let's say they have a $2,000 a month American Express payment that they're paying, you know, again, do the math. What's your interest rate on the Amex bill? What is, you know what I mean? Like, you've got to do the whole picture. Otherwise you're missing the mark 100%. Yes.
Sometimes. I gotta let Robbie answer that one because
You miss 100% of the shots you don't take, I believe is the.
There we go. Oh my God, we weren't going to get through this without some sports analogy, right? That's good.
Well, it looks like a previous baseball coach of mine chimed in the chat and said to say hello. So hi, Vinny.
A previous baseball coach?
yeah,
Wow.
look at that. He's famous.
You're so famous. Okay, so there seems to be a little shift away from thinking that the appraisals are the end all as far as Fannie Mae goes. Yes, did you guys see that this week? So I'm looking at that. We'll get someone on here to talk about that, whether that's a good or bad thing, but everything keeps changing. It just doesn't stop.
Actually, there was another little interesting thing in the appraisal news. I may have mentioned it a week or so ago, but there's with all the discrimination and appraisals going on, some of the appraisers now are countersuing.
Yes, I heard that too.
Because they're suing for loss of business, loss of income, and you can't prove that I discriminated. And so people that have been suing appraisers because they feel like they've been discriminated against are now getting hit back on the other side of that. I don't know which side is right, but it seems to be both sides are kind of, it's definitely wrong to discriminate, but it's also wrong to accuse someone of discrimination if it non-existed. And so it's a real fine line there, but it's penalized both. The penalties on both sides are really bad. I mean, if you're an appraiser, suddenly you're out of business, because if you have a lawsuit against you, you no longer can do appraisals, as far as I understand, because no one's going to want you, because now you're named as a discriminator.
In my opinion, the problem is that the accusation is made and then the whole thing is splashed across headlines, and a decision is made based on a headline. And we all know that's a bunch of crap a lot of times. So, I mean, it's not that that doesn't happen. It's not that there isn't discrimination. It's that you need to do an investigation before the headline happens, right? That's what I think the process needs to include. There should be a very, very definitive way to handle an accusation of any sort of discrimination, especially appraisal in this particular case. And so again, do you feel like you were discriminated against because of some reason? And again, I had somebody tell me their borrower thought they were discriminated against because they had a Trump sign in the front yard, which had never even occurred to me that might come up as something that someone
What was in the front yard?
A Trump signs supporting Trump. They got a low appraisal and they thought that's why it happened. So again, whatever your thing is, if you feel that you're discriminated against, there should be a system that is used where you file your complaint and it goes through a process to decide to determine whether it is correct or incorrect. Instead of somebody files a case and then there's a huge headline and there's no dive into the facts, because
Well, I believe that's our job as loan officers, is to challenge that, and I think that's our system. But
how do you keep it out of the headlines before the final determination is made by hopefully experts who aren't biased at all? That's my hope.
yeah, well, I think loan officers, that's our job, is to, if you see an appraisal that you don't feel the value is correct, it's your job to see about it.
That's a completely different conversation. We're talking about headlines and the fact that the appraisers are now finally coming back and saying, listen, I was unjustly accused. I have a friend who, they've been doing appraisals for 30 years. They went all over the place. They love doing it. It's great. And they were accused twice in a year. It took 9 months to get to the end of it. They were not discriminating. And that was determined at the end, but it completely killed them for almost a year. It was devastating. And they don't want to do appraisals anymore. Okay, that's not okay. Just like it's not okay for someone to worry, oh my God, I'm having an appraisal, I'm going to be discriminated against, because they think everyone does that. You know what I mean? There's got to be some way to create a process that keeps the bad people out and the good people in the industry, just like mortgage lenders, etc. But gets rid of these accusations being the death knell.
Let's move back to away from appraisal and back to where the market's going, because that's Robbie's specialty here. That's my thinking, at least. So Robbie, he's got all this stuff behind him. He's got this big construction going on in his house, but at the same time, he's still following the market every day. So those of you who get Rob Chrisman's newsletter, it's Robbie's the one who's writing all the market commentary, correct?
Not writing it. He's got his
team.
Yeah, his podcast. Go.
No, well, I do write the market
There you
commentary.
go.
You write part of it, right?
Well, you just plug in what you want to Chat GPT and away it goes, and then you don't have to do anything these days, correct? That's how
Okay,
how my kids are going to get into college.
I know I've talked to your dad while he's doing his commentary, so I did. Okay, so it's a combined effort.
It is a combined effort. I'd say he's more editor in chief, and the opening paragraph is always his writing.
Gotcha.
I was ready to rant on appraisers for a second, but
you can feel free to rant on appraisers, but
really, is that your take? You want to rant on appraisers?
I would like to know why the appraised value comes in at purchase price about 98.5% of the time. But I'm going to be more positive and say there's a lot of really interesting property tech going on out there. And you would think that we can get to the point where it becomes some sort of algorithm saying, these are the appliances, the exact model and year. Here's the height of the ceilings in these rooms. We did a 3D scan of the place. boom, spit out a value, pulling in comps and the other things like core logic values and then that sort of thing. And then I think that would remove the discriminatory element from appraising.
So what do you do about the let's say a view, Robbie? What is a view worth if you're an AI bot or of some sort?
That's a great question. I think AI is more intelligent than any of us. So you never know
It's
what.
written by humans, though. How is it more intelligent?
Isn't it? I don't know.
It's brand new. It has.
If I was intelligent, I wouldn't be in mortgage banking. Okay, don't put that on me.
Hey, wait a second. Don't you say that people in mortgage banking are not intelligent? That's a bunch of hooey.
Only
Now-
those that don't work in sales.
Okay, I'm just going to leave that alone. I feel like I'm going to step on a landmine right there, right? It is, so I have a really good friend who's on like congressional subcommittees about AVMs and about appraisals, et cetera, et cetera. And his contention is that the appraisal and the collateral is the most important component of a file, right?
Yeah.
The most important thing. And leaving it to some random computer system, and Zillow is a great example of this. If you put a property into Zillow and it's in a subdivision and everything is like, great. But if you stick an address into Zillow and it's on, on one side of 580 in Oakland, and it's going to be, it doesn't know the difference between one side of the freeway and the other side of the freeway as far as values, et cetera, et cetera. I don't know how we reconcile all that.
It would based on historical comps. It should.
Okay. And then do we get to rebut that?
I don't know.
I don't know. All right. Well, I think that, I think you're right. I think that we are headed to a much more automated everything.
Yeah. And and take your thing about the thing that bugs you about appraisals when they always come in at the exact purchase price. What really bugs me about appraisals is when they come in $3,000 or $5,000 under the purchase price.
Oh my God. Or 1,000. I want to come in $1,000 under. I think I've talked about this before. I wrote, it was that I got the same appraiser, did another one that day that was also just barely low.
Mhm.
And I wrote this note to the AMC and it started with a sentence. I think the appraiser needs a hug. Never thinking they were going to forward my email. No, I thought this would be like a conversation with him. And then I had outlined everything that I believe to be correct or incorrect about the appraisals. And so I sent it to the AMC. They sent it to the appraiser. And oh, it was the funniest thing. He writes back, I do need a hug. I'm like, dude, you so need a hug, obviously. But the bottom line was $1,000. $1,000. You're just being a jerk. And I'm being kind right now. Kind.
I'm not saying anything. I can add to that one, but usually I find why that happens. It's because the appraiser was stood up on an appointment or the client showed up late. And that's their way of kind of giving a little dig into here. I'll get back at you on this one.
Okay, what about when they don't? So Kevin does have this series, talked about it before, where it's not just that. You either somehow you pissed off the appraiser, basically, is what you're saying.
Mm-hmm. Don't piss them off.
Yep.
They ask you to do 10 o'clock on a Friday, be there at 10 o'clock, be there at 9:30 and have good communication with them. That's what I coach all my clients. Greet them with warm cookies. Dirk said, if you want to, your appraiser is your friend. Take care of them, be really friendly. Don't come in with an attitude.
That is, I totally agree with you, but I think some of them are just.
Well, I think it brings up a good point though, and that is the mortgage industry and the mortgage process, as technologically advanced and efficient as it gets, is always going to be relationship based. It will always matter at the end of the day.
Mm-hmm.
Well, and that's why it's so important for us as LOs, especially right now, and AEs, frankly, because, again, AEs are frustrated because nobody goes to the office. They can't come and see us. We're frustrated because we don't know our AEs and all we ever get is emails or whatever, right? There's this real disconnect right now. And so that makes it difficult. But as far as our borrowers go, and we're going to be talking about this a lot coming up, is we have to, create value for ourselves so they don't think they can just go get it done with pushing a button, right? Why do I need an LO? If I can get an appraisal done, why do I need her or him or they there?
Or
So,
they us. Yep.
what? Right? Like,
Wait till
why?
AI starts taking the place of loan officers.
Right. But we know, because we're doing this every day, that very few files fit that little box. And especially when you've got such a high number of people who are in a little box they don't want to get out of as far as their rate. So they're happy with what they got. Now, I have a friend who is an AE for a company. And let me tell you something, she doesn't give the slightest anything about rate. She just tells people, look, here's the rate. This is what I need to, what we need to do to be able to sell it on the back end. She got 14 loan submissions yesterday. She has 150 loans in her pipeline. This is a non-QM lender. They're not the lowest rate, but they get it done. That's the reputation. Can you get it done? And so you have to make that your reputation. Okay, I'm going to call Kevin because I know he's going to work hard. He's going to get my loan done. You got to be that person in your market. You got to be proactive because sitting around looking good, I mean, it worked for Kevin, obviously. But
You gotta think outside the box.
what?
Absolutely thinking outside the box. Using more private money lenders right now. I got a deal this week from a private money lender that like no traditional lender would ever have done anything close to what we can get with a private money lender. And this is for a good A borrower. But the terms in the deal was so much better from the private money that it was just like
Crazy. I feel the same thing where it's cheaper, less expensive, and way easier mostly to go private money than to go non-QM. So don't get that out of your arsenal of ideas.
We'll see. Now I just gotta need my clients to find a house. Robbie, can you do something about that?
That's a huge problem, is finding a house. That is a huge problem.
It is a huge problem. I have one quick comment on this conversation, and I had a MLO on my podcast yesterday, and we were talking about when I was in charge of a lock desk, and it was always that my sales staff would come to me and go, "I'm getting beat up on rate. I'm getting beat up on rate," and everything was rate. But when I was buying a house, I said, "Who do I want to work with? What company has been good to me?" And a lot of the time, an eighth of a point doesn't make a huge difference to people. It's who do I want to take me through this process? Who do I trust? Who do I feel good about? And that's how you close deals a lot of the time.
Yep.
You don't like that, Audrey?
Tear of happiness. I mean, we have a millennial saying that. That's amazing. And the reality is that the average borrower these days starts their search online. Even if let's say somebody says, oh, call Kevin, right? So they're going to say, great, they're going to Google you. They're going to check you out. They want to see a presence online. They want to know you have a reputation. They'd like to see some reviews. And they're going to do a little research. This is what I love about my millennial borrowers. They do their research up front. They know something, right? And then they want me to hold their hand through the rest of it. And that's what I think. It's great. I think it's a great combo. And I've heard LOs go, well, I don't like working with millennials because they ask too many questions. I'm like, okay, that is our job. I mean, that's exactly what we're here for, is to answer the questions and to be there for them. So be that resource, for goodness sake. And pick up the phone and talk to them, because the emails, it's not personal enough. I mean, sometimes you can do that in text. We do all that, of course, but talk to your borrowers, get to know them, understand them. You know what I mean? Anything else on this, kids? I'm obviously not talking to Kevin.
No, don't talk to me. It's
well, kid, that's not you. Okay, so I just like to take a moment and bow our heads and give a little thanks for the fact that we have the 30-year fixed in this country. Because guess what is happening in other countries? Central banks are hiking their rates. We had worried that this was going to happen months ago, a year ago, or whatever, when it all started. It's happening. People are having to sell their houses in other countries and leave their homes, because as their central banks are hiking interest rates, they have adjustables, and they are absolutely dependent on that, whatever that rate is. And then once it gets out, it gets to the point where they can't handle it anymore, then they're toast. And some of these central banks hadn't hiked rates in like a decade plus. So people are really used to
freaking out. They haven't seen rates going up forever.
That's right.
Julie Malta, who is one of the ones that helped us get Lawrence Yun, is commenting that there's only two countries that have a 30-year fixed. I heard there's three technically, but Julie, put in the two you think of, and I want to hear what she has to say on which countries. I know US is one, and I believe Canada is third. So, she says Denmark. Canada has some 30-year fixed, but it's rare. Not rare. Okay, not Canada. I've heard France also you can get it, but it doesn't make sense. And so when I was just in England, people kept saying, "Oh, what rate do you have on this thing?" And they're all quoting 1-year term rates. That's all they have. And yeah, they were all concerned about it. And that's why when I was just back there, that all the projections were that home prices were going down because rates are going up, and everybody is now paying a higher rate because everybody's rate is going up. And so it's slowing the economy. But we've talked about this before. Their Fed has more direct impact when they increase rates across the country, other countries, because in, let's say England, if their Fed increases the rates by a quarter, it literally goes right into the pocketbook of every citizen who owns a house at that point. Am I correct there, Robbie?
I am not up on the British.
Not up on that one, huh? Okay, no problem.
No, but just in general, Robbie, I mean, your thoughts on a 30-year fix versus an ARM, a 3-1, 5-1, 7-1, 10-1, something that has a period where the rate is stable, not fixed, stable payment, stable rate for a few years. I mean,
2 years ago, I would have been very happy to have a 30-year fixed, and now you see there's a lot more demand for ARMs, and it's good that companies are willing to look into expanding their product offerings to get more borrowers in homes or more borrowers refinanced.
Yeah.
do you think that's the way forward?
I think free money from the Fed is the way forward. I don't know how you do it.
Yeah, no, so the problem is for like clients right now, they're gambling that if I take a 5-year or a 7-year, that they think that rates will be lower by then. Now, if they listen to what the Fed is saying, everyone seems to be believing. That's why when you look at the Treasury bills, the short-term rates are actually higher than the longer-term rates. It's
Inverted yield curve. That's what you're looking for.
so like the 1 year, I saw some rates the other day where I forget who the lender was, and the 1 year was at 5%, and the 30-year or the 10-year was at like 4.5 or 4.3. And my thinking was, well, if I was going to invest the money, I would put it in the longer one, because most likely, my comment to the guy was, those are probably better returns than you can get from the S&P 500 in the short term.
All right. Well, Kevin's opinion on the S&P 500, really? That's where we're going today?
Yeah.
Oh my gosh. Meanwhile, we have prepayments on our little 30-year fix at all-time lows at 0.33%. I mean, there are like most people are not paying off their low rates that they had. The other thing too is the annual home price appreciation is leveled off, obviously, and we've seen declines, but there aren't. I was listening to a Black Knight podcast about that they do about the market, and they were saying that they were not seeing massive price declines. They called it a hardening prices, and they said it's very geographic. It depends on where you are in the country for sure, and there are still some areas that are being hit harder than others, but there are some parts of the country where demand is really strong. Everything's over asking. And in fact, I was talking to a realtor this morning in San Francisco who just got 5 offers on a, I don't know, $2-3 million property. And so it just depends on the property. Is it priced well? Like, how is it being?
I think it depends on who the market is. Like, we got a comment that, in fact, it was related to San Francisco. It said San Francisco was down 15% in the 94118 area code. But that is like a working class neighborhood versus your $3 million one is not such a working class neighborhood.
Are you allowed to say that anymore, Kevin Casey? You better consult your list of words that are no longer allowed by the CFPB. Gosh darn it, I meant to get my hands on that list this week.
Yeah, no, I'd say working class to me, working class is first-time home buyers, typical, starter families, that would be there. Your $3 million property in San Francisco is some tech executive with, LinkedIn or Google or Facebook or somebody.
Okay, so let's talk about your neighborhood that you grew up in. It was working class when you grew up in it, right?
It was, yeah.
Which I think is why
My
you're
neighbors
the
were
word.
middlemen, mechanics, firemen, police officers,
Right.
and now it's all tech, and
True. So everyone's back.
Yeah.
Well, good Lord.
Yeah.
So tell me, Robbie, what do your friends think about buying houses these days?
Well, that same comment about San Francisco being down 50% addressed the elephant in the room, and that's housing supply. Even if there's demand to buy housing, even if people feel, hey, it might be unaffordable, they still want to be in houses. There's not that many houses out there. Between home builders are building at a lower historical rate than they have at any point in the last 5 or 6 decades for whatever reason, with supply chain issues and labor costs and other factors. But also as everybody here knows, who wants to move out of their house and give up their 3% 30-year fixed rate mortgage and have to get a 6% one? So until something starts to give, the supply part of the equation is going to be really tough for housing. But if we're talking S&P stock picks, home builder stocks generally lead the country out of recessions. And I think DR Horton and Lennar and a couple others are
good knowledge. There we go. And how are they doing these days?
Good. I think DR Horton's, well, today they're getting slammed, and Lennar had to adjust its earnings outlook yesterday. But over the last 5 or 6 months, they're up 25 or 30%.
Wow.
See that there? See, that is knowledge right there.
Well, I heard there's no fact checkers on this show. I'm throwing out things about the Fed's balance sheet. Who knows if that's true? Who knows the stock now?
You know what? Don't even start. Trust me, we got fact checkers on here all the time. All the time. Okay, so back to my question about your friends. Like, are your friends buying houses? Do they want to buy houses? Like, what's the sentiment out there in your age group?
The shrewd sentiment would be that people feel like they missed the boat if they didn't buy in the last couple of years.
Really?
Rates have gone up, prices have gone up. Why would I change my same place that I can rent for $1,200 a month? My mortgage payment would be almost $3,000 on that same property. Why change? I'm happy to keep my money invested where it's invested. I don't need to put it in the house right now, especially with the lack of supply and the bidding wars that we're still seeing in a lot of places.
So we really have to do our homework in that case and make sure that we're showing comparisons on, maybe you can keep paying your rent at that level right now. But if you bought the house, then X, Y, and Z would be true, which is you'll have appreciation. What will that look like? Your landlord can't kick you out. What would that look like? Your rent can't go, you know what I mean? And rents have definitely leveled off. They're decreasing.
Leveled off. They're actually decreasing a little bit. As far as new future
on the area. Yeah, that's true. So, but with that being said, there's uncertainty in renting, and that's what what people don't always get until it bites them in the ear. So there was like a 72-year-old woman who had been renting this house forever. She was in Marin County, and she had been renting. She ran a daycare out of there. Again, can we just recap? 72 years old. And then her landlord decides that he's going to sell the house, and she's out. So not only does she not have a home, but now she doesn't have a place to run her business.
Mm-hmm.
So how's she going to make it? So
good luck trying to get a renter and a landlord to say, oh yeah, you can have a bunch of little kids in here and be running your daycare out of my place that you're renting.
So I think education is the key here, where you're guiding your borrowers so that they understand the pros and cons. And it's really tempting to stay. And this was a conversation I had years ago, like 2015. I think I was walking out of some senator's office in Washington, D.C., and they said, hey, and by the way, we saw a statistic that Black home ownership rate in the city of Oakland at that time was, they had bought like less than, it was this tiny amount of people who were African American or Black who had bought houses that previous year. Why was that? And I looked at her and I said, do you really want to know? I mean, at that point, the conforming loan limit was much lower. It definitely didn't accommodate house prices in Oakland. That means that down payment assistance, first-time home buyer programs didn't apply. I mean, it was a real train wreck, right? And I said, and by the way, you have rent control. So you have somebody who's living in a 2-bedroom, 2-bathroom condo on Merritt paying $1,420 a month. And to your point, Robbie, to move to a house in a less desirable location, they would have to more than double their payment. So let me count the ways, right? So you artificially are subsidizing somebody staying in a rental property for way too long. But then when they're 72 years old, all of a sudden it's sold out from under them and they're in trouble, right? So not fun, not good.
I think there's some good comments in the chat, and who wants to pay for their landlord's appreciation? But it does so, and you made a very good point. It comes down to education. People might apply for a loan to see what they can get. It's on you as an LO to say, hey, this is why it's better than renting. Here are the positives of leveraging yourself up and getting the appreciation on a much larger asset. Here's why it's time for you to stop paying somebody else and being at their mercy every month. There's education is really key. And I see one more thing in the chat. Jill James says, Robbie, what do you tell your friends about not buying now? If people are in a position to buy and they want to buy, I say buy now. Buy when you can. And it's never too soon to get into a home and start getting some of that appreciation.
So we should make you our spokesperson.
Well, I've incurred the wrath of LOs before, so I claim it.
So what, you're saying you're afraid of us? Do Kevin and I scare us?
I'm afraid of you specifically. Kevin seems a little less scary.
Yeah, I am. That's for sure. She hits hard.
5 feet tall, for God's sake. How hard can I possibly be hitting? Although I do have very tall brothers and a lot of them and a tough sister. Oof. Anyway, so I love it that your advice is buy now. And again, don't wait for the bottom. This is us educating people. You've got to get out there with this messaging. Otherwise, people will continue to believe the headlines, which are scaring the crap out of them, right? So that's our job right now. And if you're not doing that full time, you're not treating this time like a real job and working on and in your business, you're doing yourself a disservice, because going forward, it's all about, do you know the technology? Because you're going to need it to keep up. Do you have systems? Because you need those to make sure that you're on track. Do you have proactive things that you do every day that are going to create that business? And again, you can't get sucked into the whole rate thing. I mean, go find different borrowers, honestly, if you have to, because to Robbie's point, an eighth really doesn't make a huge amount in a payment. Now, granted, 3% does. However, again, do the math for your borrowers, be that resource for them, right?
I would agree. I think Robbie said it.
Don't shake your heads, people. Say something, for God's sake.
I already said, you want me to say yes? Wow, thank you for recognizing how right I am.
Yeah. God, that is so brilliant. I can't believe
when you throw out a leading question, you got to throw out one that we haven't answered already, because then we're like, wait, we said
tell us something we're missing that we should be talking about.
Me?
Yeah, you.
I thought the show ended right now. Anything you want to ask a millennial? Anything you want to ask a millennial before we go?
Yeah, this is your big chance. Ask a millennial. God, that could be a segment we do regular. Ask a millennial. Robbie, you'll be it. So make sure that you keep in touch with all your friends and know what they're doing too, right?
Yes, ma'am.
Yeah, and I think actually the millennials are kind of past the age mark. We're starting to get in the generation behind the millennials now into buying.
You know, no, we're not. You know why? Because the average age of the first-time homebuyer right now, 36 years old.
Yeah.
36. That's the highest it's ever been.
36?
36. Isn't that crazy?
Wow.
I know. I
So
thought
it's
that
still
was.
stuck with millennials. Is that what you're saying?
Pardon me?
We can't go to the next generation yet?
Well, I mean, you can do whatever you want, Kevin.
Traditionally, though, the first-time home buyer is 32 to 33. So,
Not anymore.
So now it's 36.
That's the whole point. We've shifted. And it's because things are more expensive, because, right? So that has changed a little bit, but still, they want to buy houses.
And they should. The
And
earlier
they
you buy it, the more it appreciates.
That's right.
Back to Robbie's thing about when should you buy? You should buy now.
Yeah, I'm surprised and happily so to hear you say that, Robbie. Okay, what else? What else you got, Mr. Chrisman?
Nothing much. I want to say thank you very much for having me. I think I'm not as big of a draw as some of your other guests might be, but I really appreciate you asking me to come on.
You know what? We need to have more people that are not old like us in our business. And we've talked at some length about this because it's hard to be in our business sometimes. It is your commissional, I mean, especially if you're an LO, et cetera, or an appraiser. You're not paid a salary. You are paid based on what you produce. And it's hard to ramp up to the point where you can support a life that way, right? And I think that's the barrier of entry to a lot of people. But we really value your opinion and your input because you're, oh my God, I feel like I'm about to quote a Whitney Houston song. I believe the children are our future. Anyway, so it's really important that we know what you're thinking, what your friends are thinking, what the sentiment is out there, and then knowing that you are out there actually, telling people what the real deal is. That's important.
Maybe now's my chance to plug the podcast. If you
That's a
want to
great
hear
idea.
this beautiful voice without seeing all this crap in the background, tune into the Chrisman Commentary, Daily Mortgage News.
Right. And you should be subscribing to the Chrisman Commentary anyway, but then you can hear Robbie, and then you do extra interviews that I've heard. I mean, I've heard you doing the extra interviews too. So tell us about those. How do you choose who you're gonna
Your invite is in the mail, I'm sure.
Yeah, it hasn't come yet. I don't know why. Hey, I was just on someone
He mailed
else's
it when it was in
podcast the
Italy.
other day. Huh?
He mailed it from Italy when he was traveling.
Yeah, I was just on someone's podcast. They thought it was all right. Published it. It was in everything. Robbie Chrisman. Anyway, yeah, we'd love to do that each
So
time.
how do we find this podcast, by the way?
Search Daily Mortgage News on any platform you get your podcast from. Spotify, Apple, Google
Daily
Play.
Mortgage News.
Daily Mortgage News.
That's super simple.
Yep. Even Mr. Correct can handle it. All right. So again, coming up, we have some really great people joining us. So next week, again, Dr. Lawrence Yoon, Chief Economist for National Association of Realtors. He's a really good guy.
Smart.
What?
Super smart.
Very smart, very obviously has his ear to the ground and has everything I've seen of him thus far. He's got a pretty positive outlook for things. So
He has all the NAR's data too. That's the really key one for him.
NAR data. That's what I want. NAR data.
Yeah. He knows every single house that sells in Fresno, California. I mean,
actually, one interesting point about the NAR data.
Yeah.
Pending home sales are one of the few economic reports that are forward-looking because it's based on contract signings. Everything else, when you look at GDP or payroll,
Right.
it's always in the past.
Right.
It's already happened. So the NAR pending home sales paint a picture of what's going to be coming up in the future.
Yeah, that's great. And existing home sales are 90% of the market. The new home sales are only 10% of the market. I mean, sorry, not pending home sales. Existing home sales are 90% of the market. New home sales are only about 10%. That's shifted slightly in the last year or so, but it's important to note when we're watching those reports. So with that, anything else to add before we part? All right. Great to see you, everyone. Thank you so much for coming and seeing us today. Thank you, Robbie. We think you're wonderful. And we'll look forward to seeing you next week till 11 o'clock on Tuesday, Pacific time. And if you are in Chicago, it's 1 p.m. Okay. So we'll see you then. Thanks, guys.